Alright, welcome in everyone. Hope you're all doing well for yourself. In this video here, I'm going to be showing all of you exactly how I made almost $6,000 in payouts within the last 40 days, all from trades taken live inside of my Discord. And real quick before we proceed, I'm going to go ahead and pop up the proof and executions before we proceed, and I'll show you guys exactly how I did it. So we are now sitting at $5,500 in profit in the past 40 days, all from prop firms. Zooming into the chart here, what we're going to be looking at is understanding liquidity. Every single one of my trades, high probability, are taken on the basis of liquidity and time. And in this case here, okay, without some type of stop raid and an opposing obvious higher time frame key level, there is no trade. Okay, but in this trade here, you can see that we have this short-term low formed. We drop down below, sweep that low. Now, in this context here, how do I know it's not going to slip beyond this low right here? Okay, time and understanding liquidity. If you take a look here, we drop down, take this short-term low. We drop down a second time, take out this short-term low. And then we drop down this third time, heading into 1 p.m., okay, getting close to our kill zone at 1:30 to 3 p.m. That is our PM session kill zone, okay? So whenever I see price drop down here, that is actually completing our 3 drives pattern lower. So we have sell stops continuously being taken on a short-term basis. And then by the time we enter 1:30 p.m., I understand there's no need for another low to be ran because we're within the kill zone and the dirty work has already been completed. And looking at the opposing end, I see that we have this very obvious stacked up trend line liquidity. So trades up here, trades up again, matches that, trades off, trades up again, matches that, trades off. What this is doing is the engineering of buy side liquidity. Every single time they make this top, they're selling it for a point of a good deal of retail investors to put their stop loss above these highs and look at it as some type of protected high. And I understand that. So what I do is I allow the marketplace to sweep sell side liquidity. I wait for the proper time of day. In this context here, I wait till 1:30 p.m. and anything from 1 to 3 p.m. is where I'm really looking for my high probability PM session trades. Okay. Another thing you want to look at with the liquidity run is, do we have a discounted rate to be working with? Well, if you take a look at this tangent area and you go to your hourly chart, you'll find that this is an hourly fair value gap we're working in. Okay, so we have everything that we need now. The final piece of the puzzle that I look for to make this thing very apparent and easy to see, I need displacement in the direction of the higher time frame key level. Okay, so not only do we have this engineered liquidity pool, but above that, we have a very obvious and clear higher time frame key level. So without a higher time frame key level or higher time frame draw, the trade's not high probability. Okay, so anytime we have a short-term liquidity pool intraday and we have a higher time frame key level hovering above it, the probabilities for bullishness are always very, very heightened. Okay, so we have every single thing that we need. We have a liquidity raid, we have a higher time frame key level we're working off of with this hourly fair value gap, and then we have this sudden displacement in price right here. You see that? Now, what I'm looking for following this displacement is, do we have some type of short-term retracement back into the displacement? Yes, we do. If you see, we rise up here and then we trade back down, trading into this fair value gap right here in price. So whenever I see that, I'm automatically buying that. Stop loss goes below here. Okay, 20 handle stop loss on the NASDAQ. If you take a look here, there's a smaller fair value gap here. So you always want to buy the first array and put your stop loss below the second one. So there's 2 fair value gaps created here, and I'm putting my stop below the second one. Okay, so I'm buying here and looking to get covered at this higher time frame key level. And I did this live on stream, and I was able to catch this and cash out and secure my last payout. So the main takeaway from this is, the last thing you want to do when looking for good trades is overanalyze. You're sitting up in your seat and you're trying to stack up all these confluences that aren't there, and price is just unclear, and it's just very tough for you to be very, very confident in price. Stay away. Okay, wait for it to become obvious. If you look at this setup here and you're thinking, wow, that looks pretty obvious, and this is something that I would take 10 times out of 10, then you get the point of this video. What you want to do, it sounds very, very easy when I say it like this. Easier said than done type of thing, okay? But if you're able to apply it with consistency, which 90% can't, you will automatically be placed in the 10%. So simply by having patience and being able to wait for these obvious setups and not waste your equity in the low quality setups and low quality price action where it does not look this clear, okay, automatically you're going to be profitable. That's it. That's the keys. I just gave it to you right there, okay? So allow price to show its hand to you, okay? Have an opposing higher time frame target and have obvious price action like this. All right, guys, so from here, we're going to flip to another setup, okay, and I'm going to give you guys another example. All right, guys, looking at this next example in price here, same exact criteria that we're looking for as the last example. This day here particularly is actually what secured me my most recent and largest payout. It was a very good day, very obvious, very clean, day of week aligned, all that good stuff. Now, same exact criteria that I'm looking for. I'm always looking for repeating phenomenons in price. It's not guesswork. It's the actual stuff that repeats day in and day out. So, just like the last setup, we ask ourselves, do we have a sell side liquidity rate, and do we have a higher time frame key level to be working off of? This tan shaded area here, this is a daily fair value gap extended out to the right. As you can see here, price drops into a short-term discount into the daily array, and also sweeps an obvious pool of sell side liquidity below these relatively equal lows here, right? So whenever I see this, okay, as we've been rising up and forming bullish market structure, I look at the opposing end and ask, do we have an obvious opposing target? And in this here, we absolutely do, because from this high here, higher time frame order flow, all it's been doing is dropping down, dropping down, dropping down. And what happens when we do that? And we have this sensation now taking place. We now can reasonably suspect price to revert and target this next opposing obvious pool of liquidity. Why is this the obvious pool of liquidity? Because as the market drops down, a very large amount of retail investors, they're trailing their stops above this high here and this high here. Why? Because they're selling from this high, and as it's dropping down, they're trailing their stops. Or for those that are looking at this as, support and resistance, okay, it trades up, makes a high, trades up here. They're selling that and putting their buy stop right above this high here. As the market drops down, they feel safe when we're hanging around here. And what we want to do is target those who feel safe in the marketplace. So it's no surprise that we see it launch up here. So in this example, this will be our obvious opposing target. So let's go ahead and drop down to the 5-minute time frame. So looking at the 5-minute chart, same exact thing as the last setup. Do we see something obvious in price? Remember, you're not getting in the charts and over analyzing, sitting up in your seat, looking real, trying real hard to just force something in the marketplace. We all see it. It's very, very obvious. It's moving. It's displacing. That's the type of stuff that you wait for. But people love to lose their equity in low quality setups that don't move like this. But whenever we see this is what we want to be a part of. We have all the higher time frame context. Now all we need is a large displacement in price. Well, we have two examples right here. We have this displacement above. We have a 5-minute fair value gap here. There's opportunity number one. You'd want to be longing here, put your stop loss below here. Now, within the second displacement, we ask ourselves, have we reached any type of key higher time frame level yet? No, we absolutely not even close. So whenever we see this next expansion in price, we view this as a second opportunity to enter the marketplace. So whenever it drops back down, there you go. You buy that, stop loss below, aiming for that obvious opposing higher time frame target. Very, very simple. So this right here, you can look at this, and once again, if you're saying, wow, that looks obvious, you're getting the point of this video, okay? But what's very, very important is to not lose yourself within the gray area, okay, whenever price action isn't so clean like this, okay? Because it's not going to be this picture perfect every single day. Everyone's going to be taking this stuff. Everyone's going to be in these setups, but 95% of them still cannot be profitable long term because they lose all their equity in the days surrounding it, okay? So if you're able to have that patience, hone in on that skill set, and apply some consistency to that, nothing, and I mean nothing, is stopping you from ripping these markets apart. So I hope you guys enjoyed this one, got something out of it. If you did, hit the like button. See you guys in the next one. Now, for those of you that would like to trade with me live Monday through Friday, every single week, work with the team, earn, learn, all that good stuff, go ahead and see the pinned comment, and there's going to be a link for my Discord. You can tap that, join, and from there, once you get in with us every single day, the only focus is going to be getting better every single day. Now, as for that last example that I just overviewed for you guys, I'm actually going to go ahead and I'm going to put the live stream recording right after this clip, and you guys can watch that for yourself and see the executions, okay? So, other than that, hope you guys enjoy the remainder of your day, and I'll be seeing you soon. Know that. So, perfect world, what the market would do for me here is keep these lows intact, and then from there, spike below those lows, touch, and drop into new week opening gap, and then we'll get some type of change this day delivery. Okay, like this. And then somewhere within this initial price leg, I'll be able to enter long right within here. And then I'll be holding on for right up here. Okay. So like I said, if it drops down to the fair value gap, that would be a high probability entry point in my eyes. And I would go ahead and take that, and I'm going to aim for, assuming that the short-term buy side would not be engaged yet. And then this black line right here, that would be the target. Okay, so go ahead and buy that. Okay, stop loss remains below the fair value gap. and then take profit simply going to be right at the midpoint of that 15-minute inefficiency. So, and then another depiction of what we're really showing here is, remember, it's the same, it literally repeats, like, I can't tell you how many times in any given session. We trade up, relatively match this high, trade off, and as it does that, we're buying, anticipating that this is just more engineered buy side liquidity. So once it pierces above there, we would just be trading on the idea of, you know, retail seeing this as resistance, putting their stops above there as it trades down, and then slams up and takes them out. So we just traded above short-term buy side. So in this case, I would trail my stop to break even. And now we're just going to wait for 25% of that inefficiency to be engaged. Okay, so about $500 in profit. We now have risk removed entirely. And unless NASDAQ reaches this high here, I'm just still hold on to this thing. So anticipating NASDAQ to slam up into here, and E has to reach 25% of that premium inefficiency on the 15-minute time frame. So essentially this would be 29, 13.5 handle trade. Okay. So as stated, risk is completely and entirely removed, and we're just waiting for full TP to be hit. But listen, this is just what happens when you have the patience and you know what your model looks like and you wait for it, okay? Even if this trade didn't pan out, like, it's still the same exact notion. Like, you wait for your model, okay, it performed, you take it, win or lose, like, you finally found your model and price and you understand it's just yet another day proving that whatever your model is repeats, right? So yeah, NASDAQ still didn't take the high yet, so I'm still holding on. So if NASDAQ took the high, I would start considering closing the trade, but you know, NASDAQ still didn't take the high. So like if I was trading NASDAQ right now, my take profit would be just resting right above here. So let's see if it can reach that 25%. Like I said, I don't need, you know, Terminus is 50%, but I don't need that. I'm just going for the lower quadrant, and that's it, okay? Trigger here, ready to take profits, okay? You're gonna have to take $300 there, guys. Boom. So in regards to the one contract, and full take profit is going right up to that 50%. So this market not showing me a willingness to go lower, and displaces once more. And then we had this specific up close candle that I'm utilizing, and I had to do it. I know I ended the stream, but this was just way too in my face and way too clean for me not to engage with it. So we're buying the mitigation block, and then we're aiming for the midpoint of that 15-minute imbalance that I showed you guys. Okay. Okay, risk gets significantly decreased, so relatively break even. So essentially risking not really anything on this trade, and you know, be safe on the NASDAQ micros here. So what I'm going to do is aggressively trail my stop loss up. So one of two things are happening here. I will be put in 73 handles of profit here with the stop loss getting hit in profit, or it'll actually slam up to full terminus here. Okay, so basically what I'm looking at is this trend line sensation going on here. Very inefficient. The members and I sat through this for about 3 hours, and basically just looking for this to be offset, which technically has taken place. So we actually ran above this high here. Okay, but more specifically, I'd like to see the whole thing be upset. All right, so waiting on that, and the rest will be history. So really, you're looking at this, and I would anticipate this to remain open. You know, you're probably saying, well, you're opening yourself up to the risk of it retracing to this Fairvega gap. Well, in this case, understanding we have both sides of the curve efficiently delivered in the form of sell side and buy side, this here is a balanced price range. So I wouldn't really want to see it trade into that, especially since we have this first one right here. So, I mean, whether I'm right or wrong about this or not, the outcome remains profitable. So, so as I mentioned, we have this 5-minute gap. Be expecting this one to hold and propel us up into what would be our terminus here. All right, there it is. There is my 74 handle trade depicted here. So we cut costs by moving our stop loss up, and that just inevitably got tagged. So that is it.